Hello everyone, welcome back to my YouTube channel Iraqi Dinar News. Welcome to our deep dive into the intricate world of currency valuation and economic policy, where today we're focusing on the recent discussions around the Iraqi dinar. The debate has been sparked by a controversial opinion piece that criticized the idea of floating the Iraqi dinar without first ensuring a crucial economic condition is met. The author of the piece has been accused of lacking a fundamental understanding of economic processes, international finance, and the mechanisms of money transfer in a productive society. The Iraqi dinar's valuation is not just a matter of numbers, it's a reflection of the country's economic health and stability. The Central Bank of Iraq has been at the forefront of this debate, discussing ways to increase the value of the dinar and stabilize the market. This is crucial to alleviate the burden on citizens and address deficits. 1. But what does it mean to float a currency like the Iraqi dinar? Floating a currency refers to when a country allows the exchange rate to be determined by the open market through supply and demand relative to other currencies. This is in contrast to a fixed or pegged rate, where the value is set against another major currency, like the US dollar. The dangers of floating a currency without the necessary economic foundations are real. It could lead to a violent collapse of the dinar and rampant inflation, causing prices to skyrocket too. This is particularly concerning for Iraq, where large segments of the population are already vulnerable. Economist Nebel Alabama Masoumi has warned of these dangers, noting that such a step could lead to disastrous economic consequences too. The Iraqi markets are already feeling the pressure, with specialists warning that floating the dinar could further raise the dollar, decrease confidence in the dinar, and increase market prices. 3. So what is this important condition that must be achieved before considering floating the dinar? It's the diversification of the economy. A diversified economy is less vulnerable to shocks and can create a state of balance in supply and demand. Without this, the policy of floating the currency is not of real benefit to the Iraqi economy. 4. The Central Bank of Iraq's recent measures to create domestic demand for the dinar and accelerate banking in the economy are steps in the right direction. These measures are crucial for de-dollarizing the economy and moving away from the dominance of cash and informality, which are the structural causes behind the currency's turmoil. 5. However, these changes will take time, and the dinar's depreciation has continued. In February, the dinar was about 13% lower than mid-November's levels, and the spread between the official exchange rate and the market rate rose significantly. 5. In response to public demand for immediate solutions, the central bank, spurred by populist rhetoric, opted for a revaluation of the dinar exchange rate against the USD. But this nominal change does not address the underlying issues and does not alter the pre-revaluation relationship between the market and the official exchange rates. 5. As we can see, the situation with the Iraqi dinar is complex and requires careful consideration of economic principles and the realities on the ground. The criticism of the author, who called for floating the dinar without proper backing, highlights the need for informed debate and analysis in such critical economic decisions.